What's up, everybody? Michael Silva here. This is When the Bears Cry. Well, what am I referencing? If you remember this pretty little thumbnail over here, that episode was titled, This is When the Bulls Cry. And that was November 3rd, and we were looking at the same chart as it was coming down here. This is where the Bulls typically see capitulation. And as you can see, we saw a monster rip from that level up to the upper portion of the channel, which tells me that, hey, the Bears are feeling some pressure. We're going to talk about that and more in today's Stock Market Brief show. Make sure to hit the thumbs up. Come on, just hit it. Come on, just hit it. Let's get into today's show. Now, tomorrow we have unemployment number coming in before the market opens. That's jobs number. This is going to be huge, people. So today's episode is going to be quick to the point, give you a good sight of what I see in the market, but understand that this report can change the trajectory of pretty much anything. And the honest thing here is, even if we knew the numbers, like, it's very hard to determine how the market is actually going to even respond when they see the numbers. Like, is it going to be coming, hotter than expected, and that market's going to say good news is, bad news? Or is it going to come in under expected and bad news is good news for the market? As it stands right now, like I said, if I had the numbers, it's going to be hard to I wouldn't even know. It's a very hard thing to determine. So what we need to see is how the market digests it so we can start putting risk back out on the table. So we got to be careful. Now, if you take a look at the S&P 500, we're going to get into what it is that I see in the markets. Today we tagged, this is some monster volatility, folks. Monster volatility, we tagged the upper expected move. We discussed that one yesterday. We tagged the lower expected move for the week. And you can see as we touched into that upper expected move, tagging into it, we actually sold back off. This was one of the, I think I tweeted about this, or I don't know if it was in my Discord or not, or just a tweet, but you can see that the price action got pushed away, and then we started, just putting in a series of higher highs and higher lows here in the short time, pretty much short term, waiting for some sort of market, report, market data, market something, right? We didn't do much today. It was a lot of chop. As you can see, we finished not flat. It was flat. It was just a lot of chop. That's all it was. So what are these numbers on my screen right here? We got a number here. We got a number there. That right there are representing the expected move for the SPY going into tomorrow. So the SPY is expecting approximately a 4.33 expected move, which would put us at the lower range down here at 403.05 and the higher range at 411.71. 411.71 is also just roughly right where the top weekly expected move is. Now, I want to be very, careful here, saying like this is the expected move, what the options market is priced in based on volatility. And 68% of the time, right, if you're looking at a bell curve, it will close within that expected risk range. But we this year have seen multi times that it's a 2 sigma move. If it's a 2 sigma move, people, that can take us right back down here, or it can take us way above. Okay, so be aware of the levels 411.71 and 403.05 going into tomorrow. When I look at just this and you take out narratives, okay, you can look at this right here and you can say, it's, potentially, so many different ways you can look at this, right? You can say, hey, it's wedging right here and it could break down. That's a small term bear flag. Or you can look at this big old pull right here and be like, oh, actually, it's a big old pennant and we can be breaking out and could see a potential 2 sigma move. Well, we are above the 5-day moving average. I want to get into the anchored VWAPs because this could give us a little bit more clarification as levels to watch when the report hits, and we might see some, quick shakeups take place. So first and foremost, the blue line right here, that represents the month-to-date anchored VWAP, also the daily VWAP, and the daily VWAP actually held all day long. You can see that we broke down through it early on. We came back up and we just doodled all day long on the month-to-date daily anchored VWAP. Below that, here is this white anchored VWAP. The white anchored VWAP is just anchoring it to JWAP. Sorry, Jerome Powell. I call it the JWAP, the Jerome weighted average price. Every time Jerome talks, or you get news announcements, you can anchor it and you can watch it. Then we have the week to date. Okay, so you got to understand this move right here was a very powerful move coming from Jerome Powell. So the average buyer from this move is above, in the green, right? The average volume is above the green because we're above that anchored weighted average. So if we start breaking down from these levels, one would assume that if we break down, the average person then from buying at this point on would be underwater. And if that's the case, well, sentiment can change and we could see a stronger dip. So what would that mean? It could mean that we can head back down to where? Potentially fill this gap over here, which is roughly around the week-to-date anchored VWAP. So that would be the next level of interest to be keeping a close eye on, okay? And that right there is, roughly I don't know, just weight it yourself, 401-ish, right around that level, okay? Put it on your screen if you haven't already. Another thing to keep and consider is looking at just the year-to-date anchored volume, anchored VWAP, and you can see here the SPY is actually floating right around the year-to-date anchored VWAP, and we've broken through it a couple of times, but we've actually, ooh, what was that? What would happen? Yeah. Okay, we've broken through it a couple of times, but you can see we came right back down. So we're gonna pop and go. It's too hard to say, but we are still below it. Now, keep in mind, if on a year-to-date basis, if the average volume is below it, right, sentiment is fairly bearish. But if price action gets above it, the average volume based off of here, right, through all this time would be above, right? So that's important to know for sentiment, because people can get pretty bullish, and it might, despite seeing lower highs and lower lows, might bring in some more excitement to see a potential push higher. So we got to keep that on deck as a potential outcome. Keep in mind where price came from, a very strong move. We'll talk about divergence here momentarily. It's not just the SPY, but the IWM you can see is holding up at that year-to-date anchored VWAP as well. You can actually see a little bit more consolidation here in this little tight range. So a break here might perpetuate a nice move, potential pop like we got here, right? We got a pop, boom, but then it faded right here when we got above it, pop, boom, but it faded. So keep an eye on these levels, people. Now let's get into some of the indicators. So this one is looking at back month versus front month volatility. And yes, there are little spaceships on my screen. What do these spaceships represent? The yellow line is back month versus front month. And all I want to point out here is that when this yellow line goes up and the VIX comes down, which is the brown shaded area, you can typically see market rallies, okay? So that's what we've seen. Now, when we get up into around this 1.8, 1.2 range right in here, you can see I have these little red spaceships, and these spaceships, while these spaceships are basically marking previous tops of these bear market rallies. And during that time, the VIX also came down to this lower range, roughly at around 20 to 19. Boom, boom, and then right here where we're kind of at. So this is just a potential, not a warning shot, not saying that we're going to crash, but just be aware that this is getting a little extended, right? The back month versus front month is getting a little too hot and heavy while the VIX is coming down. And the last times, just looking at this chart, right? I'm not making it up. Looking at this chart, I can even go back potentially a little bit further, but in the year of 2022, when this has happened, it has marked short-term tops. Well, actually, it's been marking tops of these bear market rallies. On the flip side of that, if you look at when the line was down here, down here, even, roughly down here, and then right here, it's actually marked somewhat of bottoms in the short term there too as well. Right here, it went down, but then started going back up. And then even right here, boom, it marked this short-term bottom. So it's an important indicator to watch. I like to keep a close eye on it, especially when it hits these levels. What else took place that was quite interesting? Some risk-off type sentiment is taking place going into this jobs report. So gold saw a huge move. This was, we talked about gold volatility yesterday, and I wasn't expecting a move like this, but the volatility being so low lets me know that, hey, this can be a very potential time to start getting invested. Now, I don't like buying gold at a level like this. I remember, scaling in a while ago, or I hold some gold coins and stuff like that for the long term. But when I'm trading, I don't like to just buy at a very high point like that. I like to wait for pullbacks, very similar to how we saw this flag right here. And then we saw a pop, maybe sell some, and then boom, maybe sell some more, and then you buy on the dip. That's how I trade it. Now, the other people, you can not buy dips. You can buy long and just say, I'm planning on holding it because I think we're going to go way up here. But I like to trade, right? So I trade the pullbacks and so forth. But keep in mind that is getting pretty frothy. RSI is getting up there to overextended territory. We do have that slight negative divergence, but it is a interesting thing to keep a close eye on because it does seem like a risk-off event happen. And it's not just this. If you pay attention to Michael Gayad's research, he also looks at lumber to gold and lumber to gold ratio. And one thing that I pointed out on Twitter the other day, it was a chart that looked just like this before this day. I was saying wood looks like lumber looks infested with termites because this, you look at this big pull down and then price action is not going anywhere. It's not bouncing. It's just going sideways, this bear flag structure. And it looks like, somebody's just sitting here, walking a plank. And if you walk off the plank, you just flush down to the water, right? And you can see today we saw some big volume on a move of down 4.29%. With gold also going up. So this is very interesting to pay attention to. If you look at his lumber to gold ratio, Michael Gayad's or his research, you can see that it is still a risk-off environment. Now it's starting to point back down again. I found that to be pretty interesting. Also to keep in mind, oil, we're getting a bounce, right? We're getting a bounce in an overall downtrend now. And this is something to obviously keep a close eye on as well, because oil has been getting destroyed, right? Has the Fed been fighting inflation, or just has oil been going down? And is that what's causing inflation to come down? This is all just important assets to be keeping a close eye on. If we take a look another further for a risk-off asset, look at TLT today. It was up 3.19%. I've been tracking, oh man, did I not bring my chart? Oh, I did, yes. This chart, I've been tracking this chart. And you can see it actually, we, expand, contract, and then we expanded, and it actually broke out to the upside. So it was in bearish structure, but we broke out to the upside, which to me, I don't know if this is like positioning themselves for risk off going into an unknown macro chart or macro data drop. So we'll see how this plays out, but it did break out from this down channel. This is not something that I would be just buying into right here. Even if we start, moving higher faster, it's just, I would wait for pullbacks, because if we are moving into stage one, which we talked about on various videos, if you haven't, go watch that. Actually, my last video that I posted had like a blue line on it. It looked like this, the thumbnail. I said change is coming, and we were talking, go watch it if you haven't watched it. I was talking about stage one, where bonds go up, stocks, commodities go down, and that is in the contractionary phase in the markets. And what I'm pointing out here is we're seeing risk-off stuff type to happen, right? It's just one day. But it seems to me that we're making the turn, and you could even see that in the econ drop today. I'm not going to dig into that today. It was not good, right? So very interesting stuff taking place overall. Another thing I want to point out is copper. Copper got a nice big bid over here. People are going to be all like, woohoo, copper, here we go. We talked about this when it was down here, and we talked about the positive divergences between the S&P 500 and copper. And I don't know if this is going to play out or not, but what we called out the positive divergence where copper makes a higher low, but the S&P 500 puts in a lower low. Those are the blue lines on the screen. And you can see that every time that we, had that divergence, so for example, we had the higher low here, right? And the lower low right there on the SPY, this gave us an indication saying, hey, we might see a pop, boom, pop, boom, pop, boom, pop, boom, pop. And then the most recent one over here we talked about, right? Boom, pop. However, if you look at the flip side of this, okay, if it works for that way, would it work for the opposite? And if that's the case, well, copper's been getting a bid, but you can see that it hasn't actually taken out this high. And if you go straight down, boom, and you look at this high, S&P 500 has taken it out, so it is actually a negative divergence. So I went back and I was like, okay, well, let's just look if I can find any. Oh, I was like, oh, okay, well, I found one right here. Boom. That was the end of that bear market rally. Okay, this little tiny thing right here, boom, copper got shot, bam, crushed to the downside. I'm like, okay. Then this one right here actually is a negative divergence. We had a wick go above, but it closed below, but it didn't even actually, this line actually technically goes, only to here, right? So this was going down, this was going up, and then boom, to the downside, and we're starting to see that again. I don't know if I'm going to read too much into that, but it's something that I saw, and it's something that I want to share. Why did we see all these assets go up? Well, it could be because the dollar took a big hit to the downside. So the dollar got hit pretty significantly to the downside. Now, this is going to be important to pay attention to, because the 10-year yield is actually pulling into a pretty interesting area of support. And also, the dollar is moving into a interesting area of support, right? So boom, resistance. Boom, breaks out. Boom, acts as support. Boom, we're right here again. And boom, the S&P 500 is still within this structure. So we saw gold rally high, right? And if gold wants to take a back seat, maybe it's going to be because the dollar is going to find itself a little bit of groundwork, a little bit of a footing, right? We don't know how the jobs report is going to affect the dollar, but right now, if the dollar starts bouncing, that could make the S&P 500 come back down, right? So this big move downside, it didn't actually lift the S&P 500 all too much up like it did on the previous trading day. There's one more aspect here that I want to cover. Earlier today in the Patreon group, I mentioned this. I said, this is an interesting thing to note. If you look at the S&P 500 compared to yesterday, the zone I'm talking about, there's a large lower high. And that's what I mean, like right here when you look at the highs. I'll show you here momentarily what the updated zones are. And then the dollar has a higher low. So basically, in quick, what that looks like, if this is the S&P 500 right here, boom, I'll just make this green. Let me see here. And then this is the zone, the upper zone right here. And this is the lower zone. Well, what I'm seeing is this came way down despite the market rallying up. And then as the dollar's going down, the zone itself is going up and it's actually just about touching it. So if we look at the updated zones, right now what I'm seeing is the dollar, it has, minus 0.25 to the downside. Remember these, let me try to change that back to a different color. These are just risk management tools, people, okay? And it helps you guide and see the overall market. That's why I share them on the swing trader thing. But the dollar right here, Dixie, you can see the upside 2.77% versus minus minus a quarter, 25 basis points to the downside. So it's at the lower end of the zone. And then S&P 500, you can see here the high is at 40.93, whereas yesterday, I don't have it here, but I know I have it on my other screen. Yesterday, the S&P 500 high was at 41.56. So that's a big move to the downside despite seeing this bullish price action. So what it's telling me is there's a 0.5% upside versus a pretty large downside. So I don't know if this is an early indication telling us, hey, the market, whatever the report says, the market could potentially, take a little bit of a breather. I don't know, but that is what I'm seeing currently on the currently here on my screens. I wish I had more clarification for you, but if I told you in certainty, I would be lying, okay? Remember, this isn't like financial advice. This is me just telling you and showing you what I see on the screens. Let's get into transports a little bit and industrials. I posted a Twitter thread of whether or not it'd be a good time to buy industrials. If you want to read that, it's a quick thread, but here's one of the charts on there. We had a lower high in transports. We have a higher high in industrials. That's a subtle divergence. So we'll see here if it plays like it did last time at this bear market rally coming to an end. I'm still surprised this is holding up despite its bullish day the prior day. So we'll see if this breaks, right? The housing divergence, that broke. The other ones broke. So, we'll see. We'll see. Another one I want to call is Nasdaq new highs and new lows. Now, in this year, it's been a very big struggle to have more new highs versus the new lows. And there's been a few times where we have, okay? So going back to December of 2021, you can see we had it here, we had it here. That's when the black shows up right there above that zero line. And then right here, we were talking about it. And now I'm gonna bring it up again right here. We finally got, what do you know? It's reading 18, right? So that means we have new highs, more new highs than more lows. And if you look at the screen, the market, this whole entire bear market has not been able to hold that. So every time it comes to this area, it's coming off an overextended territory. So when you see it, boom, we fell to the downside. Bam, to the downside. Bam, to the downside. Bam, to the downside. So is this time, are we going to be able to withstand this breath and build more new highs versus the new lows? And are we going to start to come out of this? Or is this just telling us, hey, we're getting extended again, we'll probably see some sort of drop? I don't know, but looking back through history of 2022, this is what has happened, and these are things that prepared us for the prior falls, like here and like here. If we continue on, we look at the advanced decline line. I'm actually hiding the advanced decline line. I used a couple breadth indicators. I learned this from David Knepp. I always forget his name. Forget his last Knepp. I can't pronounce his last name, but I thought it was kind of a cool way of, finding divergences where you can see the EMAs, putting in higher lows, and you can see here the price action is putting in lower lows, and you can see, bam, that was a kind of a way of seeing, hey, breath might be picking up. Boom, we saw that. Boom, we saw this. But I also want to call out, hey, is it going to work in reverse, right? Price action's going higher here, but you see this has kind of come to a standstill. So is this divergence basically telling us, hey, breath, right? Market breath is kind of just neutral, whereas price action has been going higher. So is this going to resolve itself to the downside or to the upside? Something to pay attention to. The summation index still points straight up here, people. So that's still bullish as it stands, but it's happening so too on still a pretty gnarly divergence there on the NYSE-McClellan oscillator. Same thing with the NASDAQ-McClellan oscillator. Pretty negative divergence taking place, and you can see that we are still positive. The parabolic star has not upticked through that summation index to potential potentially identify a change in trend. So we'll continue to monitor that. On top of all of that, we look at the BP charts, the NASDAQ bullish composite, still a divergence that's almost built in right here. You can see we're not quite in overextended territory, but it looks like we will get there. The BP INFO, this is the tech sector, clear negative divergence as we're moving into overextended territory there. And if you look at the NYSE bullish percent index, clear negative divergence there as we're putting in new highs there, but the RSI is not matching as price action's moving higher. So that is something to also pay attention to. And BP SPX chart, it's 73.91 reading on the RSI. It's in overextended territory. And this also getting pretty frothy up here as well. So we have a negative divergence forming there. And then obviously the Dow Jones Industrials too as well has a subtle negative divergence that is in the building process. So people, overall, let's conclude. Last time we talked about was when the bulls cry. Now I could only imagine that the bears are crying on this rally. Now remember, when the bulls were crying down here, it was the time to take action. Are we going to see the same results? I don't know, but from a probability perspective, one would think that, hey, the risk is to the upside where the reward could be to the downside. I hope today's episode helped out everybody. See you on the next.